Hi there, Shingirai here again with an update on global current affairs. A tide of relief seemed to sweep across the markets after President Trump and Xi proved they could play nice during their conversation at their G20 meeting in Osaka, Japan this weekend. The leaders agreed on no further punitive measures against each other's countries, but beyond that, the nature of the truce or path going forward remains relatively opaque, with intellectual property issues, Huawei, and access to China markets still being an issue. Moving over to the United States, last week the S&P closed the week at 2,942, meaning a year-to-date gain close to 17%. Treasury markets yield continued downwards as expectations of Fed base rate cut in July was being priced into a market. Volatility down 0.32% this week. Later on in the week, we expect the non-farm payrolls and unemployment rate coming out on Friday. In Europe last week, it'll be interesting to see how things play out in the bid for the UK top job and how investors price in no-deal exit possibility over the coming weeks. Europe was moderately up in terms of US dollar terms. The Euro Stoxx up 0.35%, and on a year-to-date basis, the German benchmark led the pack, rising 16.7%, with the Spanish benchmark rising 6.8% in USD terms as well. German 10s were down, closing the week minus 0.33%, and we expect some PMI data to be coming out of Europe this week. Asia Pacific, last week the Hang Seng China Composite Index closed at 10,882, down 0.36%, and the Nikkei was down 28 bips, and what we saw was that the 10-year Japanese government bond remained flat at 0 bips, and the US was up against the Japanese yen. The People's Bank of China Q2 monetary policy meetings did come out during the week as well, and here what we heard was a cautious tone with regards to liquidity and managing financial risks without creating excessive credit growth. The State Council of China also agreed to reduce fees and taxes for small firms in order to lower their output costs. China and India would be expected to have their PMI data coming out later in the week, and the Indian budget would be expected as well later on this week. In Latin America, Brazil and Mexico both turned risk averse, and this will be interesting seeing that Mexico recently survived a close run-in with President Trump with the 5% tariffs. Globally, gold has enjoyed a good year as a haven to counter risky asset losses, whilst oil continues to enjoy support from US-Iran trade tension, low US stock supply, and continuing OPEC plans to cut down on production.